Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, welcome back to the show, and Happy New Year and Merry Christmas to our Orthodox friends.
Jim, I'm very happy to be launching Kaiser Watch in 2023 for another year of weekly episodes, and Happy New Year to you and our audience out there.
John, why does your 2023 favorites collection have twice as many companies as last year?
Jim, at the end of 2021, when I launched the Kaiser 2022 favorites, I undertook a strategic change in the way I run Kaiser Research. Before that, it was kind of a stock picking service, and the favorites were behind the paywall. But I realized that my primary subscriber base were people who were interested in Kaiser Research as a research platform, because we cover all the resource-listed companies in Australia and Canada. And they were interested in the bottom fish workshop, where we look at companies that don't quite have it all together, that are going to take time to flourish, and there is an opportunity to research them, accumulate them, and when they take off, that's great. Then we're looking at 2-3 times right away, and then continue going. And so I was conflicted between audience who would sign up during good times, and they'd be very confused about what all this was, and the sophisticated audience, some of them who have been with me for 25 years or so, since 1995, when I launched myself as an independent newsletter writer. So I decided, why not just make the paying part of Kaiser Research about the bottom fish workshop and the research platform, and use the Slack forum as sort of a collaborative space where we post ideas, where I can educate those who want to learn about the bottom fishing aspect, and then make the ones that are graduates from the bottom fish arena, turn them into free available Kaiser favorites. So when I launched this at the start of 2022, I had only 8 companies. I was quite nervous about the general equity market and the bond market. You could see that interest rates were going to go up, and that all the air would come out of the technology stocks, and that at some point crypto would blow up. But I felt the resource sector, it might be able to survive this, because with the whole post-COVID comeback, there was going to be growing demand for raw materials. And because of the decade-long bear market we had for the resource sector, the pipeline of new mine supply is not really throbbing with new developments. But it was worked well for the first quarter of last year, but then the whole sector got caught into the whole downturn as interest rates really started to take off, as the Russian invasion of Ukraine created supply shortages, which helped fuel inflation in parts of the world. And so that year ended up pretty bad. My index, my 8 favorites, were down about 36% at the end of 2022. Not quite as bad as the TSX Venture Index, which is supposed to be the cream of the crop and only has a couple hundred members. It was down 39%. But in the process of this year, I was able to, see how all this works, get these Kaiser Watch episodes, which are now completely controlled by me and not part of the Discovery Watch anymore. And so this year I doubled the list to 16 companies to provide a much broader coverage of what I think will be key themes through 2023, which I still think will be a bad year for general equity markets and bonds. But I think this will be a year where the resource juniors, which were roadkill in 2022, are going to have a chance to stand out based on their stories as standalone stories.
Your favorite 2023 favorites include 3 lithium companies: Brunswick Exploration, Critical Elements, and Cypress Development. Why did you pick these companies, and what can we expect from the lithium sector in 2023?
Okay, well, let's start with the lithium sector outlook. I talked a lot about Lithium Mania 2.0 last year, and this is focuses on the problem that if the electric vehicle replacement of internal combustion engines is supposed to be reality by 2035, we need 10 times as more lithium supply as is currently being produced. And the imbalance between supply and demand that started to develop in late 2021, it took lithium carbonate prices up to $36 a pound level, which is really quite high. It had been as low below $3 a pound. I think the future sort of range, long-term range that's required to make a tenfold expansion a reality is $10 to $15 per pound. Now, this year, the Australians got back into gear and are mobilizing new supply. The lithium triangle players are also ramping up their brine supply. China is doing its absolute best to squeak lithium out of its deposits, and we will see the imbalance shrink this year. And from an optics point of view, the market may not like it that the lithium carbonate prices may sink back to the $10 to $15 per pound level, but the reality is all these economic studies that are being done, they're all assuming a long-term price of $10 to $15 a pound. Now this assumes that inflation stabilizes and doesn't crank up costs. If inflation continues and costs rise, well, then we will see higher lithium carbonate prices. So I think for people who really understand the urgency of the next 3 years in identifying all these pegmatite sources that are going to not come into production until 2030, but need to be identified now, and then have all the tedious economic studies and permitting and construction happen between 2025 and 2030, this is the big window for Lithium Mania 2.0. So the company, Brunswick Exploration, is my favorite in terms of tackling eastern Canada for pegmatites. They did a lot of field work in 2022, picked up lots of land positions, and they really have a search and destroy mission. They put out a press release this week that the market didn't particularly like, because they say, okay, New Brunswick's not that interesting, Newfoundland's not that interesting, Nova Scotia, we really can't figure it out. That area south of Val d'Or, the Pontiac area, we didn't really find any that are true LCT projects, and we are excited about Hearst in Ontario, which we are going to be drilling, but our focus is now shifting to the James Bay region of central Quebec. And the James Bay region, I think, is going to be, like the Pilbara in Australia, a major future source of lithium supply from its pegmatites. They're large. They run in the 1% plus lithium oxide range. And so Brunswick is going to be very active. And because they have projects on multiple fronts and a team to really test these trends and find the big ones, and they're using a simple screen that when they walk the ground, if they don't see a very large body and it's kicking a rubidium or whatever it is they're using with their XRF guns as their indicator, they're not wasting any time on it. They're looking for now 20 million plus ton footprints. And this year is going to be the year where I think Brunswick Exploration becomes the sort of star to rival perhaps Patriot Battery Metals, which with its Corvette project has really shown what the potential is in the James Bay region. Critical Elements has a lower grade project on which they completed a feasibility study, and it works really well at their base case price of $12 per pound. And they are now going through the permitting cycle, and they have additional land in the area. And one of the interesting things about companies like Critical Elements, they've been at this for more than 10 years, and they've been hyper-focused on the rose pegmatite, figuring out all its metallurgy, designing the plant and all that. So they have the potential to also now finally look around them while they're plodding through the tedious part of permitting and development. And while their average grade is slightly below 1% lithium oxide, that could still change, and they could become right now it's around $2 a price. This could end up being a $5 to $10 a share stock. And again, when lithium carbonate prices come down, the market will sort of be unhappy, but the stock's not being valued at $36 a pound lithium carbonate. So for the smart people who are out there, they'll be in there, they'll be buying this. And I think the big money, the institutions, they're going to be very interested in North American sources of lithium, as are the battery makers and the car makers, because they've been kind of relying on the lithium triangle and Australia, and they are building their battery factories in North America, in Europe, also the hydroxide refineries. They're finally shifting their reliance away from China, but they haven't really figured out where is the feedstock supposed to come from. So it's going to be a good year for that. And Cypress Development is my claystone favorite. They have their project Clayton Valley right next to Albemarle Silver Peaks operation. They are working on a feasibility study. Their PFS that they put out, they've completely changed the flow sheet. They've figured out how to deal with a problem using sulfuric acid, which involved yes, you use it, you get the lithium out, but then you've got this gypsum that precipitates within the water, and water's scarce in Nevada. You have to recycle it, but you can't wait for it to evaporate to get rid of the tailings. And this was a big problem. These are the subtle things with these claystone projects. The devil's in the details. You can map out your tonnage and say, okay, we got so and so much per ton rock value. That works. But there are all these technical details that they have to deal with. And they have a new flow sheet. CapEx and OpEx is probably going to be double, but I've run some preliminary numbers using their existing ore schedule, and in that $10 to $15 a pound range, this will work very well. So this is the one. It's in an area where there isn't going to be any obvious complaints from either Native Americans or from sensitive habitat considerations. And that's why I've got these three in there. I'm not doing anything with the brines because I really don't understand them. And I think that's already the playground of the bigger players.
Canalaska Uranium is the only uranium junior in your 2023 favorites. What are your thoughts on uranium and why pick Canalaska?
2022 was a pivotal year for uranium. And we can thank Russia to a large degree for this transition. Now, we did see a number of groups create these entities like the Sprott Physical Trust start cleaning up the surplus spot material that was slopping around the market, keeping the price low. But we've now got it stable at just under $50 a pound. It's traded in the $50 to $60 per pound. And some of the companies who have crappy projects that weren't worth putting into production were using their money to actually stockpile U308 in anticipation of it getting back into that $80 to $100 a pound range. Now, the big change is that Germany realizes now that it made a huge mistake with Angela Merkel's knee-jerk reaction to Fukushima and shutting down their entire nuclear energy industry. Now that their reliance on Russian gas supply has proven to be an absolute disaster, they are now rethinking it, but of course they now have to recertify all those shut down plants. Poland has 2 nuclear power plants on the drawing board. This would be a first for Poland. And Japan, which I think 9 out of its 40 or so plants are operational, it's now saying, we were going to rely on LNG imports for our energy requirements, but now everybody's relying on LNG imports because the Russian gas isn't flowing where it was supposed to be flowing. So there's competition for LNG. So they're trying to figure out how to turn their nuclear power plants back on. But the problem they have is that in the past decade, literally everybody was out of a job. So people retired, found something else to do. And anybody who was studying in university to be an engineer related to this stuff, they said, well, nuclear's dead in Japan. No point. So they actually have a personnel problem. However, one of the big areas that's emerging is the small modular reactor, which is a much smaller scale type of reactor, not as risky as the large ones, not as good at providing the baseload that's required for the energy transition, but a lot of work is going into these. So the Japanese may find that, it is worthwhile to get back into nuclear. And that the skills that they have there might end up being relevant for fusion if it does indeed become a reality in 2040 and beyond. So I think the whole tide with regard to energy has changed. Biden's successful passing of the Inflation Reduction Act, which gives considerable legs to the energy transition away from fossil fuels. That's probably not going to be undermined by the arrival of Republicans again in the House and Senate, and maybe even the presidency, because a lot of this money is flowing into their states, and the rest of the world is shifting away from fossil fuels. So the attitude with regard to uranium is very positive, and the big problem is still Kazakhstan. But again, when Russia invaded Ukraine, it basically said, we want to be empire again, and all the other stands, we really still kind of regard you as belonging to us. So Kazakhstan has kind of offended Putin by allowing all the conscript dodgers to move into the country, and we don't know how reliable Kazakhstan can be to continue to be the world's biggest supplier of uranium, and also the reason there has been a lid on the price of uranium, which really, if you want to develop new mines, you want $80 plus per pound for U3O8. Now, why Canalaska Uranium? Well, they've been busy in the Athabasca Basin for 2 decades. They went into it during that first uranium bubble between 2004 and 2008. They have numerous projects in it. The Athabasca Basin, Canada's actually slipped in production because although it's the highest grade deposits in the world, they also are all underground mines and have high costs and have to deal with water coming in, and they freeze it so that the underground boring machines can mine this very radioactive ore. So there are deposits that have been shut down simply so that they're not losing money mining this material. But there's still plenty to be found, especially going deeper. And last year, Canalaska had a breakthrough at its West MacArthur project where it tested a target that had been tested before, but it turned out they didn't quite have the orientation of the geophysics correct. This time they nailed it, got a discovery, will be a confirmed high-grade unconformity associated discovery, and perhaps even a rival for MacArthur River itself, which is shallower at 600 to 800 meters. But there's no reason you can't go deeper since it's all underground anyway. So Canalaska Uranium is my favorite because it is an emerging exploration junior focused in the Athabasca Basin, which if we end up with problems in other parts of the world like Kazakhstan, Canada can deliver the uranium that the rest of the world needs to fuel its nuclear power plants.
If you're so keen about the energy transition, why do you have Colonial Coal in your 2023 favorites?
Well, I've had Colonial Coal as a favorite in the past, but I took a break last year. What Colonial Coal has in northeastern British Columbia is a couple metallurgical coal deposits. Now, metallurgical coal is harder and burns cleaner than thermal coal, which is why it's used for making steel. It's turned into coking powder, which is fed into the blast furnaces, and it's essential for steel unless you want your steel to be a lot more expensive than it currently is. And it has set in 2 deposits, Flatbed and Huguenot. It has about 700 million tons spread amongst them. The stock has been sort of $2 to $3 range, waiting for a buyout somewhere in the $5 to $10 per share range based on sort of a $3 per ton type of benchmark valuation. And we just saw Teck sell its mothballed Quintet project to another company that's been around for only since 2016, and which is active in this area between Chetwynd and Tumbler Ridge. It sold it for $120 million with only a 40 million year resource. Now the stock got crunched at the end of last year because Glencore's 10-year-long Sakunku application to put that deposit back into production, it ended up being rejected on grounds that the caribou that have congregated in this area are going to end up being disturbed by it. And the market's saying, they've decided that the caribou, which are really all over the place in this area, are going to be a reason to stop new metallurgical coal mining. And so the stock got crunched, and I thought, okay, this is a good time to put the spotlight back on it, with China hopefully opening up after it endures its COVID infection, and maybe India finally getting its act together again. We will see that buyout become a reality over the next 12 months. So again, this Colonial Coal, it's not a thermal coal. It's metallurgical coal, and we're not going to be doing without steel anytime soon. And metallurgical coal is the best input to help turn iron into steel.
FPX Nickel is the only nickel junior in your 2023 favorites and was continued from 2022 after a so-so performance despite high expectations. Why will this year be different?
Last year, FPX Nickel, it struggled with a significant institutional shareholder which had decided that it wanted to be a persistent seller. The stage that's now the big obstacle for the company is skepticism about the flow sheet that they have developed. It's a combination of crushing, grinding, magnetic separation, and then doing flotation on the concentrates to produce a sort of 63-65% ferro-nickel concentrate, which can be fed directly into stainless steel mills. And they're doing this with a 0.1 to 0.12% Davis tube assay. That's the lowest anybody out there is attempting. So there's skepticism that this type of deposit with a different nickel mineral, a waruite, can be effectively put into production. So this year, the company spent most of its efforts doing the pilot plant studies, and we should get the results from it in the first quarter of this year. And they also did work on bench scale work on the hydrometallurgical process needed to convert the ferro-nickel concentrate into nickel sulfate. And they've also now demonstrated that cobalt does report to this concentrate, so they will be able to get cobalt sulfate out. And for those battery configurations that still require nickel sulfate and nickel cobalt, this is going to be a good source that has ESG credentials, and that is in a secure jurisdiction. But one of the big developments that happened at the end of last year was that they did a $12 million financing at a premium to the market with a secret strategic investor. And just listening to CEO Martin Terrain describe all this, I don't think this is an upstream nickel miner that has made this investment, which is just below 10%, and requested keep us secret. So I think this is either a car maker or a battery maker which is looking at the long-term potential for a reliable source of clean nickel sulfate, and it is very unlikely to be Tesla, because Tesla, when it does do a deal, it makes it public. So it's going to be very interesting to find out when they finally reveal this. But it's the feasibility study which is going to be the key milestone, which we expect done by the end of this year, sometime either in the third quarter or early in the fourth quarter. Pre-feasibility study, that's going to be the key where everybody starts taking the company seriously. So I think in 2023, FPX Nickel will finally get the respect that it deserves. And when we have the PFS, we'll also see what the CapEx and OpEx cost inflation has been. I've assumed that 20% across the board, and it still works at the base case price of $7.75, and it definitely works very well at the current $10 to $12 per pound nickel price.
Why do you have a tin play called Cornish Metals in your 2023 favorites?
Tin has been one of those metals which, despite the China super cycle, total demand never really went up. Now, it's critical as the element in solder that has replaced lead. And with all the wiring that's going to be happening with these electric vehicles, the expectation is that demand for tin usage will grow in conjunction with the energy transition. Yours was a source of tin from the underground mines, these high-grade veins. All that pretty much shut down a long time ago. It flooded, and And Cornish Metals acquired the project and has been banging its head on the wall trying to advance it. The entire mine is flooded, so you need to get the water out. You need to treat it before you can dump it back into the rivers and get rid of it. And of course, to resume production, you need to have the mine dry. But the whole water treatment problem and pumping, that's a big expense. And the big change that happened last year was that Sir Mick Davis, former chief of Xstrata, through his Vision Blue resources, he made a major investment in Cornish Metals, and the company is now, I think by June of this year, they will be pumping the mine dry, the water treatment plant will be built, everything will be working, and the PEA they did, it envisioned mining two different types of ore, one that had lots of other metals in it that didn't look kind of complicated, and another that was simply tin ore. And I reran the numbers through a discounted cash flow model, and at $11 a price for tin, a pound for tin, this works really well if you just mine the ordinary tin ore. So I think even though there's 500 million issued, 700 million fully diluted, this is a value game, and we're looking at we're not looking for this to be a 10-50 bagger. We're looking at this to be sort of a 5 bagger over the next 2 years as they get this mine cleaned out, do additional metallurgical work to fine-tune the flow sheet, and do additional drilling from underground to firm up resources so that we can see that there's a multi-decade source of tin from a secure jurisdiction. And again, it's part of my whole the whole energy transition theme. It's an overlooked company. It's now financed, and it has a very well-respected backer behind the company who can continue to invest capital if more is required.
What are your thoughts on copper, and why did you pick Amarc Resources and Faraday Copper for your 2023 favorites?
Everybody is expecting a recession in 2023. It's already apparent in Europe, where they've had the additional problem of high energy prices as a result of the end of Russian gas supply. In the United States, the employment numbers, workers continue to be on the price-setting side, and this has the Federal Reserve very upset. It wants a much higher level of unemployment to take pressure off in inflation. So they're going to keep the interest rates high. In Canada, these high interest rates are going to be a problem for the real estate market because the Canadians don't have these long-term, I think, in 2023, which is not good for the Kaiser research type juniors listed on the Canadian stock exchanges, where the primary audience is the Canadian investor. But American investors, there's a growing number of them who recognize the resource junior sector and are willing to figure out how to purchase these Canadian listed securities. Now, if the world does go into this global economic downturn, it will put temporary pressure on copper, as it did last year, dropped from $4.50 a pound down to $3.50 a pound. Northwest Copper just put out its PEA, and basically the PEA for combining Quenica and Stardust, it's a bust using their base case prices, which were $16.50 gold and 363 or so per pound copper. But in the longer run, the energy transition will add substantial copper usage for all the wiring that goes into these electric vehicles. The bear market of the last 10 years, the majors who went crazy mobilizing new supply in response to the China supercycle in the 2000s, they put that pretty much on hold in the 2010 to 2020 decade. And if this global economy gets back on track, and we may have to wallow through sloppy macroeconomic trends for a couple of years, but they do have monetary policy as a solution for that. When they finally realize they've overdone it, then you'll start seeing the copper price go up. So for this year, I picked Amarc Resources as my copper exploration junior and Faraday Copper as my feasibility demonstration copper junior. Amarc is Bob Dickinson's company. It has been pretty much a bottom fish for 20 years. It has been focused on British Columbia. It has generated various projects, but I think the tide has finally changed for Amarc. It has 2 projects farmed out. There's the Joy project just north of Chemis, on which Freeport McMoran has already spent $20 million and hopefully will continue to spend money next year. And they just optioned the Duke project to Boliden, and they've started a program right in the middle of winter and are carrying through to fast track exploration of Duke, where there is no resource estimate in existence. And the pine deposit does have a resource, but it's an old resource, so Freeport's busy been delineating it, but also testing district-wide targets. And these are very strong deals. These companies need to spend $90 million and $110 million to vest for their full 70%. So as long as they stay interested in these projects, and Amarc for now is running these, operating the programs, this is going to be good for the company. But what I'm also excited about is the Ike project, which they turned into a discovery in 2014. They had it farmed out to a couple of majors, both of which ended up dropping out for reasons that I don't think had anything to do with the merits of the project. Amarc itself has been cash poor. Bob Dickinson kept it alive with loans, but it does have about $3 million working capital now. In 2023, they plan to go back to the Ike copper moly system and finish drilling the holes needed so that they can support a maiden resource estimate. But in the northern part of the property, where the coastal plutonic complex butts up against the older volcanic metasedimentary rocks, this is an area with very enriched gold zones that have never been sorted out. So that's where Amarc also plans to go to work. And they quietly optioned the old Hearn Hill breccia pipe system, which is just south of Duke, and it's also southeast of Pacific Booker's Morrison project, which is too close to the lake, so they're having problems moving that forward. But this is more inland, and Bob thinks that this can be rethought not as a high-grade breccia pipe small-scale mining opportunity, but as a larger-scale open-pit mineable system. So Amarc is my exploration copper junior bet, focused on British Columbia. Bob Dickinson, spent the last decade kind of dealing with the Northern Dynasty and had struggled to get Pebble, approved for development, which so far has been unsuccessful. And he's emerging from the semi-retirement and wants to turn Amarc Resources into a success. And he has Diane Nicholson running everything, doing all the permitting and all that. So I think this company will finally be a winner in 2023. And Faraday Copper used to be Gianni Kovacevic's copper bank. He accumulated all these projects during that bear market. He has now moved on, and a U.S. group has taken charge. The focus is the Copper Creek deposit, which is both an open pit and underground potential, and they raised a lot of money last year. The stock is down from the 80-cent price that they raised to that, but they are working on a PEA for a 30,000 ton per day processing facility. This is, of course, feasibility demonstration, but I think the pricing at this point is so low that if you take the longer view and expect copper to end up being $4.50 and better, this project will end up being a development play, and it's in an area that is not impacted by Native American concerns such as the Resolution project, which seems to be stalled because it's too close to some sacred area. So Faraday Copper is my feasibility demonstration bet on copper, trending back up and people starting to look at it as a long-term rising price. And Amarc is my discovery exploration copper vehicle with a focus on British Columbia.
Verde Agritech was a big and only winner among your 2022 favorites and was continued as a 2023 favorite. Will Verde Agritech shine again this year?
Verde Agritech was an absolute superstar last year. At one point when it was $11.50 or so, at the peak. It was up, I believe, 400%. Finished the year up, I think, 80, 90%, just below $5. 2022 was a major transitional year for the company. When it started, it had the capacity to produce 600,000 tons per year of K-Fort. The product started to get adoption from the farmers in late 2021. They decided we're going to expand the plant 2, get it. They got the permit for it. They started building it, and they hoped to have it ready by mid-2022. They didn't have it ready until early September, and then they had a problem with the road that made the road impossible, so they had to spend 3-4 weeks rebuilding the bridge and shoring up the road so that these underground streams didn't erode them with the traffic. And so they lost that final window to make their guidance. The stock got punished when they reverted back to their January guidance after raising it in May. But the whole plant is now commissioned and ready to go. We're in the sort of a slow period right now, but the planting season starts coming up in the second quarter. They're going after a NASDAQ listing. And with 3 million tons per year capacity, we're talking about a company that could end up doing between $100 and $200 million worth of revenue. They're starting the permitting work on getting up to 10 million tons per annum. So this is a growth story. Russia is digging in long term with its siege of Ukraine. I have no idea how that will play out. The Russian people seem incapable of getting rid of Putin and restoring normalcy. Although potash has continued to flow from all the sources, including Russia and Belarus, it's still going to be it's still vulnerable to disruptions. And because the world is growing, the price of potash is probably not going to go below the $500 to $600 per ton range, and that's very lucrative for Verde Agritech because it does a type of parity pricing, and because they have such a big margin, they can also start using some discount pricing to encourage repeat business or larger scale orders. So I think 2023, the big question is, will they be able to sell, how much of that 3 million ton capacity will they be able to get orders for? That's going to be what everybody is watching. And if they start having success in this, watch out. This stock will end up being a major performer from this current $5 level where it's sitting.
You have two prospect-generator-farmout juniors called Eagle Plains and Kenorland in your 2023 favorites. Doesn't this type of junior at best go sideways in an overall gloomy market?
And during the bear market of the past decade, prospect-generator-farmout types did not do very well. The metal prices, weren't trending higher. If they did a farm out to a major, the major piddled away for a while and then would give up because they decide, it's better to just not spend money on developing new supply. Let's just keep our existing operations going. And when the world ends up having a shortage, then our existing operations will have huge profit margins and we won't have all this CapEx spending that we're doing. So the majors became kind of not a major source of funding. And the little juniors that farm into these projects that the generators come up with, it's been a pretty rough decade for the resource junior sector, the crypto and cannabis and all the other non-resource stories. They commandeered all the risk capital that came into the Canadian junior sector. And now that we're heading into a recession that may last longer than people think, the outlook isn't particularly good for at least the junior types that farm into these projects that are generated by professional teams who go out there and pick up old projects, rethink them, or even do grassroots exploration. But the two companies I've picked, Eagle Plains and Kenorland, there's some similarity, but there's also a big difference between them. Eagle Plains has specialized in British Columbia and Saskatchewan, and it typically picks up existing systems. It doesn't do much grassroots exploration. it picks up existing systems and compiles the data and maybe drills some holes into it to upgrade its prospectivity in the third dimension, and then typically farms them out to other juniors. That model probably will suffer in 2023. However, this company has two things going for it heading into 2023. One, they just announced a deal to spin out their royalty portfolio. A lot of their deals, they just sell them outright 100% but clip a royalty, and they have come up with a deal to vend their royalty portfolio to a private company which will go public, and shareholders will end up with one royalty share for every 3 Eagle Plains shares, and that's potentially, based on the deal structure, probably worth 10 cents a share, and the stock's only trading 22 cents a share. They have $10 million working capital because when the Taiga was bought out by SSR, there's a share position that they retained in it. They were able to convert that into cash, so it's in excellent shape. And the Vulcan project, which they drilled 3 years ago or so in order to complete some assessment work and pick the convenient spot by the road where there was a geophysical anomaly, and used it to sort out a puzzling question as to where exactly the Sullivan time horizon is located within this stratigraphic package. This is in southeast British Columbia. It's part of the Sullivan 2 hunt, and there's been the focus for decades without any success. That answered their question, but the target itself turned out to not be caused by sulfides. But since then, they've done more work, and they did a drill program last year which generated smoke, which created a much better contextualized understanding of the geology. And they're going to spend their own nickel again this year, maybe up to $2 million, to go in there and drill these holes to vector in on what they think is a potential Sullivan 2. So if you find a Sullivan 2 in this part of the world, and then here the target is a lot less deep than some of these other targets that Highway 50, DLP, and PJX have been chasing. If they have a success, that can make this a standalone discovery exploration play with substantial upside. Whether they'll find farm-out partners for their other projects in 2023, I'm not counting on it too much. But again, if we're wrong about how horrible everything's going to be this year, well, then they will flourish. And I need to point out that in 2022, the resource juniors on the TSX Venture Exchange, their value traded was more than 50% almost every day of the year. So there's been a distinct shift away from speculating on non-resource stories to back to the resource sector. Kenorland is a new company for my group. I had it flagged as a bottom fish over a year ago. This is a company of which Zach Flood, the son of the late Ed Flood, he is the CEO. And this company, it's very impressive what they do. They actually do go out there, put geological thinking to work, and go on the ground and generate new grassroots data, stake big chunks of land, and they're doing it in an environment where the small companies aren't doing it. The big companies aren't interested in regional exploration on a 100% ownership base. And they have been really successful in farming out projects to like 20% or 30% net positions to big companies like Barrick, Centerra, and Sumitomo has taken quite a shine to them as even a shareholder around 10%, and it keeps chipping in more money every time they do a financing. And this company also farms out projects to juniors, but it does that typically on a 100% basis, clipping a royalty and getting some shares. And they just got a $9 million windfall selling their Lift Power shares to whomever bought it from them. They now have a treasury of $20 million heading into 2023, and they've got multiple farm-out projects going. So this company, although it's been flatlining since it came public and tanked and around the 75 cents level, this is the kind of company that's equipped that all you need is a major discovery on one of those projects to get a spin-out and a buyout by the major, but it will keep going and going. It doesn't really spend money on its own projects. However, it has a couple where it is the majority owner, and right now it's not doing anything with it. But again, Kenorland, you own this one just based on the people behind it and all these farm-out deals that are going to be spending money in 2023.
None of the three gold juniors in your 2023 favorites, Aurion, Endurance, and Solitario, have 43,101 ounces in the ground. Are you bearish on the gold price trend for 2023?
Well, I had Galway Metals and Perpetua Gold as favorites in 2022, and although gold basically finished the year even, those stocks ended up substantially down, and I retired them to the bottom fish list for 2023 and kept the ones that are more exploration-oriented. Orion Resources has been working on its Central Lapland Greenstone Belt projects for several years now. It is a partner, 30% partner with B2 Gold on a project where the Hemi discovery continues to attract B2 Gold's attention. The Ikari deposit discovered by Rupert next door, it's right on the border there, and the Risti project is just south, and they've been focused on chasing the source of these high-grade quartz boulders that are on the property. But the Ikari itself was discovered by drilling through overburden and discovering a hidden system that's 5 million ounce deposit for which they just delivered a PEA that indicates $1 billion plus NPV. And Orion spent last year doing a lot of sort of basal till sampling, doing similar work, and I think in 2023 we're going to see more work on drilling work on the 100% owned ground, but it's also a strategic acquisition target. Rupert may want to own Orion. B2 Gold may want to own Rupert and Orion. And Agnico Eagle is in the background. It might want to own those projects too. So I've got them there as both a potential a strategic buyout target and finally deliver a zone where I say, wow, we've got a zone. We've got an Ikari type zone. Now we're off to the races. Endurance Gold, it has the Reliance project where we still have 14 holes pending. They've extended the strike. They have a much better understanding of this high-grade orogenic gold system. And they just reported that this clay and fir needle sampling program that they did on the Olympic claim that they acquired last year to Northeast, there is indeed an anomalous trend for arsenic values parallel to the Treasure Royal Shear Treasure corridor, and that's going to be a potential repeat of what they have here. So I think in 2023 we're going to see more aggressive drilling on the Reliance project and the Bandito project, which is this red cyanide deposit that has interesting heavy rare earth values in southeastern Yukon. That might actually get some attention in 2023. And I think, the situation with China, and its desire to annex Taiwan, I think Xi Jinping has a big problem on his hands with how he handled the whole COVID pandemic. And, who knows what's going to happen there, but interest in rare earths might spark in 2023. And Solitario is one I've never talked about on Kaiser Watch before. They generated the Golden Crest project west of the Black Hills. It's a fantastic story. This area, they may be sitting on the equivalent of the 100 million ounces that have already been identified in the uplifted Black Hills area to the east, where the Homestake deposit was mined, where there were many other younger deposits in the overlying stratigraphy, such as Wharf's deposits that have been discovered. This area has seen very little exploration. It requires a plan of operations and environmental assessment. They think they're going to get it in the second quarter of this year and be drilling in the second half of this year. And they're going to be going for several levels of target, a higher level target, and they have gold outcropping at surface. So younger fluids came up and deposited gold at surface. There's the Wharf horizon, that's that's above the Precambrian basement, which could have homestake type of banded iron formation hosted deposits. So they'll be drilling these 500-meter plus holes going right through three types of targets. One probably 1.7 billion years old. The other one's 60 to 50 million years old. And this is an area of very little history of exploration, but they've already found on surface lots of evidence that it was pumped with gold. And in the background, they have a carried interest in the Florida Canyon project in Peru, where Nexa is doing all kinds of work to permit a major drill program to test beyond the existing resource. It's a zinc, lead, silver system, and Chris Harrell's not sure if they'll get it done in 2023, but by 2024, Nexa will have all the permits in place to go and test the properties on a district-wide basis, so that when they decide it's time to develop Florida Canyon, they have a sense of the scale of the zinc lead mineralization that's going to be present on this project in Peru. So with Solitario, you get both this gold blue sky at Golden Crest, and you get this play on zinc lead, which nobody's particularly interested in these days, but zinc has held up quite well. As far as gold is concerned, I'm tired of listening to the story that gold's going to go higher, everything sucks until it does. I think gold is fine here at $1,800. I do think in long-term trends, it has to go higher, not just in inflation adjustment terms, but also in real price terms. This split of the global economy into autocracy and democracy factions, helped out by Putin's invasion of Ukraine, that is going to undermine the role of the U.S. dollar as the world's single reserve currency. Countries like India are already sitting on the fence. They're happy to buy Russia's oil and gas at discounts to the market price. And they're all looking at the way the United States is able to control the movement of payments through the banking system because of the U.S. dollar. And many of these central banks have started buying gold in 2022. They've stepped it up because they've become very worried about dealing with U.S. dollars. So I think this split is going to continue, and we will start seeing more and more central bank accumulation of gold, and that could push it through $2,000 and make it go up in a way that's more than whatever inflation that we're seeing. So that trend, I think, is intact. But until we see gold go through 2,200, and it's not because the U.S. dollar is imploding or anything like that, so that, the economics isn't changing, that's when I'll be looking back at putting the Galway Metals and the Perpetua Gold back onto the favorites list, and hopefully Perpetua Gold can finally get its environmental assessment done and get that project on the move. And again, it needs $2,000 plus gold after all the capex and opex inflation of the past several years. So again, I want to see gold go through $2,000 an ounce for reasons that make sense, that the trend will continue and not just some short-term reaction to some geopolitical event. Then I'll be looking harder at ounce in the ground type juniors. But for now, I'm interested in discovery exploration, finding something that works very well at the metal prices we have.
Why did you include NioBay Metals in your 2023 favorites? Isn't the James Bay niobium project hopelessly bogged down by the internal politics of the Moose Cree First Nation?
The James Bay deposit deserves a $2 to $5 price for NioBay based on the PEA that they have done. They're supposed to be working on the pre-feasibility study. This would be the second major niobium source outside of Brazil. NioBay is the primary source for niobium outside of Brazil, where the Araxá deposit controlled by CBMM supplies 80-85% of supply. Niobium is a key part of the steel industry. It strengthens the steel, so you can use less steel in this in whatever applications you are, which is part of the whole lightweighting aspect of the energy transition. But because the Moose Cree First Nation in Moosonee has these internal politics where you have an anti-mining faction feuding with a pro-development faction, and somehow anti-mining faction got the upper hand early last year. Everything is stalled in that area. The federal government is paralyzed. The provincial government is paralyzed. So, which is why I had dumped NioBay Metals into the bottom fish category, and it would keep it there. But they put out an announcement late last year, the Crevier deposit or project, which is in Quebec. It's in an area where the Quebec Cree are fully engaged in commercial activity and want to see stuff happen, not like their Ontario counterparts. And this area has been logged over, and they when they went in to check out this existing resource on which they'd spent $9 million between 2008 and 2012 on this main dike in the area that's similar to a pegmatite, actually sticks out of the ground because it's very hard, they started seeing evidence of carbonatite in the creeks to the west between the Lake Tulare and the existing dike. And carbonatite is the ideal host for niobium, the pyrochlore mineral, and it weathers very easily. So if it's glaciated or anything, it's going to be scraped away and will end up being a ditch or a lake or a swamp-filled depression in the ground. And they did some drilling, and they finally drilled under the lake, and they got huge carbonatite intersections. Like all 4 holes that they drilled under the lake bottomed in carbonatite, and we don't know the assays left. The XRF unit says, there's lots of niobium here, but you can't quantify it without assays. They did some thin section work, and it shows, pyrochlore is present within this material. So this thing has a huge tonnage footprint, and if the assays come in at 0.5% niobium pentoxide or better over long widths, then we know we have another potential niobec on our hands. And the irony is, it was like 2 kilometers west of a zone that's only 0.3% niobium, too low to be worth developing, on which effort has been spent since the 70s by various parties. But 2 kilometers hidden under a lake could be a monster niobium-enriched carbonatite. Probably not like Arasha, which is 500 million tons of 2.5%. But if it ends up looking like Niobec, which is to the southeast, I think about 150 kilometers, watch out. This stock will rocket, and the James Bay project becomes a long-term future afterthought for the company, and Crevier becomes the new flagship story. And the stock has doubled from its bottom fish level in December since this news came out. It was a very subtle news release. Again, we still need assays, but I decided to make it a favorite because this one just has that smell of an emerging discovery, which assays hopefully confirm sometime in the next month.
John, thank you so much for the update, and Merry Christmas to all of our Orthodox friends.
Thank you. You're welcome, Jim.
I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.